Paul. Hello,
Yes.
Mr. Yew-Poh.
Yeah, namaste.
Hello.
Yeah.
Namaste.
Yeah.
Good morning, good afternoon.
Yes. Good
Good
morning.
morning, good afternoon, good evening.
Sure. So I guess we'll kickstart. We're waiting for Mr. Shobhit to join us as well, but we'll just kickstart the conversation today. So good morning, good afternoon, good evening to you all from wherever you join us from. This is a platform hosted by the Institute of Certified Chartered Economists, the ICCE, where we have conversations around issues affecting our world in the areas of economics, finance, investment, social development related issues, economic development related issues from across all parts of the world. So this platform is to use to engage resource people that we know have insights and have new ways of doing things that they will share with us all. So today, it's in that light that we are hosting this webinar on mergers and acquisition across the Asia Pacific region. And we are very fortunate and privileged to have some distinguished individuals who have not only backgrounds, but they've worked on various M&A deals across the Asia Pacific region. So with that, we are very sure to get the very best and hands-on information, which will guide us going forward. And of course, this platform is recorded and we are going to have it available on our YouTube channel thereafter, as well as our website, so you can all have access to it. We just had Mr. Shobhit Agarwal join us as well. Hello, Mr. Shobhit, you're welcome. Good afternoon to you.
Hi, sorry, I'm a few minutes late. Hi.
Yeah, it's okay. We are just.
Hi, Pankaj.
Yes. So for the benefit of those that are joining our platform for the first time, I will just play just this 1-minute video, after which I'll do just a brief introduction about the ICC, who we are and what we do. And thereafter, we can zoom in into today's webinar. So with your permission, I'll just play this 60-second video, which gives a brief intro about the ICC.
Today, we are faced with asking the most difficult questions about life, our society, and the world economy at large. The answers we seek are inextricably linked to the commitments we make and the actions we take. At the Institute of Certified Chartered Economists, ICCE, our commitment is to raise professional economists with the highest ethical standards through quality education and collaborative learning. Our global network of economists professionals are challenging conventional wisdom, advancing ideas, and contributing to the transformational agenda of the world economy. ICCE is raising economists globally, and you too can be one. Make the smart choice and become an ICCE charter holder today. Join the ICCE today and let's measure up. www.charteredeconomists.com.
So basically, that's a brief intro about the ICCE, the Institute of Certified Chartered Economists. So we are a professional body providing a qualification that is training economists all over the world. So I will share more information about the ICC. I will send our website and further details to all participants by our chat box. So I'll be sure that I'll be sending this link through so you can have access to the website and read more about the ICCE and how you can be part of what we do. Of course, after taking the examination and being qualified as a chartered economist, you get a chance to benefit from some of these activities that we are hosting, like we are hosting here today, to help you, prepare you, and benefit in terms of your career progression and the CPTs that we run. So that is about the ICCE. After the session as well, I will take about 2 or 3 minutes to do a brief intro, have a PowerPoint presentation I will do about ICCE, but that will be after today's session that we are having on mergers and acquisition. Now we're scheduled to have one of our governing council members, Professor Pradhan, from SLRI to join us. I think he has not joined yet. So at this point, I will just zoom in. So this is how the format is going to be, just to make this quick announcement. So I am Paul Frimpong. I am the global head of membership and strategy with the ICCE. I'm very privileged to be your host for today's session. And then I will introduce to you in a while our moderator for today's webinar. And he will take over and introduce one of our speakers to deliver the keynote. And after that, we'll zoom into a panel discussion, so which will be moderated by our moderator. And of course, you that is watching or listening, you can also be part of the conversation, and this is how you're going to be part of it. We have a Q&A button on the Zoom. So those who are familiar with the Zoom platform, we have a Q&A button on your screen. You have to locate it. And when you do, you can send in any question that you have regarding the topic of today. And the moderator will be able to read this question during the panel discussion to our panelists so that you can address it. So you can be part of the conversation, and we will really, really be happy that you can be a part of the conversation, because that's how we want it to be. We want to make it very interactive. So if you have any question regarding mergers and acquisition across the Asia Pacific region, please send in the question using the Q&A button, and those questions will be read to our moderator. Now, without much ado, I will proceed to introduce to you our moderator for today. So he is an associate professor of finance and accounting. He has about 23 years of professional experience, including 6 years stint with banking and financial service industry at Fortune 500 banks like the SBI and State Bank of India. He is a double doctorate in finance and management, a fellow of SLRI, Jammu, and a PhD in business management, MBA. He also has a designation like a CFA and also CAIIB, a gold medalist. He regularly publishes in the business press, the Financial Express, and has also published, presented several papers in international conferences and listed journals. He has conducted a number of trainings for clients like Energy Efficiency Services Limited, Coca-Cola, CII, PNB, NTPC, UP government. I'm sure it's a state in India. Also, he has successfully convened several international and national conferences. His academic and research interests includes asset pricing, derivatives and risk management, financial econometrics, financial modeling with Excel, corporate finance, microfinance, banking, and capital markets. So obviously you can see that he's right fit to moderate this session on mergers and acquisition, looking at his finance and banking background. He has won many awards, first position in National Big Data Championship and the scheme of Department of Biotechnology, Bank of India Prize. He's a life member of the Indian Econometric Society, Indian Commerce Association, and Indian Economic Association. With all respect, I welcome you to Dr. Pankaj K. Agarwal, which is Kumar Agarwal, as our moderator for today's session. Dr. Pankaj, please, you are welcome to take over now. Thank you very much.
Thank you very much, Paul, for the generous introduction. So it's a proud privilege for me to have been invited to moderate this session. And I also, on my behalf, welcome Mr. Yew-Poh and Mr. Shobhit. I welcome both of you, and I welcome all the participants of this webinar. So I think you people, everyone is waiting to hear our eminent speakers. So without further ado, I will get down to business. And before I invite the keynote speaker of the day, Mr. Yew-Poh, it is in order that I give you a brief introduction of Mr. Yew-Poh. Mr. Yew-Poh Mac is currently Asia Pacific Strategy and Transactions Leader at Ernst & Young. He leads the strategy and transaction practice in Asia Pacific and has over 30 years of management consulting and corporate management experience in Asia, with the last 20 years in China particularly. Before EY, Mr. Yew-Poh worked at two of the world's preeminent management consulting firms, and he's primarily focused on strategy, commercial and operational due diligence, post-merger and divestiture advisory. He has a lot of transaction-specific experience. I mean, he has been involved, has advised many Chinese companies on their cross-border transactions in countries like US, France, Germany, Italy, Norway, Australia. And he has led and participated a huge number, 500 and more acquisitions and divestitures, working extensively with multinationals, PE firms, Chinese state-owned enterprises, and large Asian conglomerates. He has a focus on consumer and industrial product sector. He advises CEOs on their most strategic topics such as corporate and business unit strategy, customer growth and supply chain, as well as business turnaround. Mr. Yew-Poh has received his master's in science degree in aeronautics and astronautics engineering from the Massachusetts Institute of Technology, and he was also an MIT research fellow. He is also a frequent author and speaker on China macroeconomics, geopolitics, and doing business in China. So, Mr. Yew-Poh, we welcome you again to this webinar, and we are really privileged to host you today. So now straight over to you, sir, for your keynote speech, Mr. Yew-Poh.
Thank you very much, Paul. Thank you very much, Pankaj, for the generous introduction. My pleasure to be here to spend time with the group here to share some of the insights that we have around the M&A market. So maybe I just have a quick introduction about the strategy and transactions practice in EY. So EY, as we all know, is a Big Four firm, right? And we have our traditional assurance and auditing practice. And then the second one, we have our tax practice, we have our consulting practice. And the fourth practice that we have, which is something that I lead in Asia Pac, is the strategy and transactions practice. So in the strategy and transactions practice, we house the firm's strategy capabilities, where, as you mentioned before, helping companies with a lot of the corporate and business unit strategy, and as well as our corporate finance capabilities, helping companies on M&A from diligence to evaluation to M&A advisory, as well as thirdly, our tax advisory capabilities. So in tax, we help companies across a whole range of issues from transaction tax structuring, tax due diligence, transfer pricing, as well as international tax advice. So as you can see, it's a one-stop shop that really could be a very effective market-facing organization. When a company would want to do an M&A or a divestiture, we would have a full suite of capabilities to advise them from end to end, if you may, right? The second thing is EY is organized across three areas. So we have the Americas, which houses our US practice, including Canada and South America. And then we have our EMEA practice, which is Europe, Middle East, India, and Africa. So India is part of EMEA, not part of Asia Pac. In Asia Pac, we basically carry our practices in 5 geographical markets. So from Japan to Korea, and then Greater China, as well as ASEAN, and the 5th geographical market being our Oceania practice, which carries the Australian practice as well as the New Zealand practice. So that's how we have organized in EY strategy and transactions Asia Pac. We have over 350 partners and close to 4,000 professionals. They are doing strategy, corporate finance, as well as tax advisory work. So very happy to be here again. And if I could share my screen, I'd like to kind of go into the content for today. So can people see my screen? All right. So I mean, yes. Probably need. Do I need to put my deck on full screen?
Yes, I think so.
Yeah, sorry. I'm new to this, so give me a second to get this done. Take this off. I don't happen to be able to see the full screen. Sorry, I don't see. Maybe I make it bigger. Like, is that okay?
Yes.
Okay, thank you. Thank you. Let's start. Yeah. So what I would like to share with you today is the major themes across Asia Pac in the topic of M&A, right? And just to give you a quick summary of what I'd like to talk about today, I'd like to provide kind of historical view of M&A activities in Asia Pac. So I'll share with you some insights from the last crisis that the world has, right, which is a global financial crisis back in 2008, 2009, how it has affected M&A activities, all the way to 2019 pre-pandemic, and the significant rebound that we are seeing in 2020 and 21. So that's a historical view. I think as importantly, I'd like to provide a forward-looking view on what we believe some of the M&A activities could be going forward in the next 12 to 18 months, and across Asia-Pac companies where we surveyed CEO and key decision makers for M&A. And I think that forward-looking view and the point of view around that is going to be very key as well. What is driving their decisions to do M&A? What are the sectors that they are focused on, and why, right? M&A is such an important business decision for all the CEOs around Asia-Pac to embark on, right? So you will hear keywords around ESG, technology, transformation, disruption, and stuff like that. And that's some of the themes, right, that I would like to kind of focus the presentation around. So in terms of, just to start off with, I'd like to introduce to you the EY Capital Confidence Barometer. So here in EY Strategy and Transactions, we have an ongoing campaign that's been running for the last 7 to 8 years, where we survey CEOs and decision makers around the globe in terms of their appetite to do transactions. So what you are seeing here is the cut for Asia-Pac study respondents. And the key question is, number one, whether they have conducted a comprehensive strategy and portfolio review that typically drives M&A activities, whether they have would like to sell off a portfolio of business going forward in the next 12 to 18 months, and whether they'll be looking at cross-border transactions. So we survey the respondents and get a sense of one, appetite, two, what are they looking to do. So you can see here the results are outstanding. 89% of the respondents told us, right, that they have done a comprehensive strategic review of their portfolio. As you know, a lot of the businesses in Asia-Pac carry multi-portfolio businesses, right? They could be into real estate, they could be into certain consumer products, etc., right? And they are reviewing their portfolio to really optimize it to stay competitive in the marketplace. And then obviously, as they review that, right, before they can acquire, divesting some of the portfolio where they may not have performed so well, will free up a lot of capital for the shareholders to be able to invest in new capabilities to be competitive against their competitor. So 73% of the respondents say that there's a big appetite to do that. And obviously the last one being 89%, looking to do a transaction in the next 12 months. So this indication to us, right, shows that the market, right, is very hot. The market is very willing to transact a bit. As we all know, in the last 18 months, everything is done virtually. So when we went into the pandemic, I personally was very concerned. As a professional services firm, we have a lot of face-to-face meetings with CEOs and boards, and whether we could, have those discussions in the virtual world, and it actually worked out really well. The second thing I was concerned about is whether the teams could actually help our clients do a transaction in the virtual world, right? Because as you know, when we go in and help a client, we would land a team at the target, right? Working with the target management to gather a lot of data, review a lot of data about target, form a point of view to the buyer in terms of some of the key risks, how we mitigate some of the risks, obviously some of the strength of the company, the valuation and stuff like that. A lot of this discussion pre-pandemic, right, was done through a lot of meetings and exchange of documents, but we managed to do it. Yeah, we managed to do it in the virtual world, and it's worked out very well for us. And our teams are really busy all across Asia-Pac helping clients with that. So that's a forward-looking view around the EY Capital Confidence Barometer. And if I move to the next slide, it's basically another question, right, that we ask, and we curate this over a period of time. So the key question we ask is, do you expect your company to actively pursue M&A in the next 12 months? So what you're seeing here is the dotted line in the middle represents the average in Asia Pac since we have started the survey. As you can see, the survey have dated back, as I mentioned, many years before today. And the average is about 45%. You can see that the chart kind of goes in 2010 because of the strong recovery here in Asia Pac, mainly from China, from the global financial crisis, that was at 53%, right? Things have kind of dipped down a little bit in the ensuing year, have been held steady, slightly above 45%. But I think the interesting thing here is you can see the drop, yeah, in 2018, 2019, and then a very, very strong recovery to 53% of the respondents indicating, yeah, that they will pursue M&A activities in the next 12 months. So we're very optimistic about the M&A environment in Asia Pac. We're very optimistic, and I will talk about a few insights, right, as to why, what is driving a lot of the M&A appetite for a lot of these companies that, some of them we work with, some of them work with our competitor, but nonetheless, it's a very robust ecosystem, yeah, of M&A activities that's happening here. Now, I just want to pivot a little bit to, historical deal value and deal volume. So this is data that we get from, third-party sources like DealLogic, Merger Market, and we collate that. The orange line or the red line that you see represents deal volume, which is basically deal activities, right? So it goes up and down across the year. And as I mentioned earlier at the start, we pull the data back all towards the global financial crisis days. And then the green bar, right, represents deal value, right? So basically, in billions of dollars, what is the value of deal activities that's happening in Asia Pac? So depending on what you work as, right? So if you are an iBanker, you're probably more interested in deal value than deal volume because the investment banks, right, would typically take a percentage cut, right, of the value of the deal. If you are in the whole diligence part of the ecosystem, you're probably looking at deal volume, right, which is the level of transaction activity that's happening in the market. So then again, as you can see here, strong rebound. Deal value has gone down significantly in 2019, and you can see a drop in the deal volume as well because of the pandemic. But again, we are seeing a recovery of both deal value as well as deal volume in 2020. Now, what is really driving that? Yeah, so I think we all know about the K-shaped recovery in the global world, right? Certain sectors are doing very well, while other sectors such as airline, travel are still a little bit depressed. The sectors that are really the stars, right, in terms of M&A activity that we have observed are primarily 2 to 3 sectors. Yeah, one is obviously technology, so broadly encapsulated under what we call TMT, which is telecommunications, media, and technology. So because the world has now gone more online, a lot of the e-commerce activities, the meetings that we hold here, and people needing to kind of interact online, so it has driven a significant upturn in that particular sector. The second one is retail, right? So retail has rebounded quite a fair bit, and retail players have found a way to do business, yeah, through delivery, which again would fuel then TMT. So some of the sectors are interrelated as well. So retail has shown a very strong comeback. And then the third one is life science and health, right? Just because of the pandemic, the importance of healthcare, the importance of some of the pharmaceutical products as companies kind of pivot towards being able to overcome the pandemic in the coming 2 to 3 years. So a lot of those deal activities have happened in these 3 major sectors. Now, are we seeing any major deal activities in the last 12 to 18 months in some of the more, as I mentioned, in a K-shaped recovery, in some of the continue to be depressed sectors like airlines? We don't see that. In oil and gas, we don't see that, but it's more in those 3 sectors that I mentioned earlier. Now, the next slide I'd like to show again is historical data as well, back to the GFC days. The other measure of complexity of deals, right, is around cross-border. So we can break down deals into deals that are done within border, which is what we call domestic deals, and then deals that are done cross-border, which is basically buying companies with multi-geographical footprint, or a company in Japan buying an asset, right, that is outside of Japan to increase its geographical reach. So we're seeing a strong rebound in cross-border deal as well. It's good news for us, right? Providers like us, because what it means is that cross-border deals are typically more complex to execute, and it just means a lot more business for companies like EY. So that's an indicator that we monitor quite a fair bit. You can see that cross-border deal in the last 2 quarters, right, have rebound about 3 times in terms of value, as you can see from the data there. And as I mentioned, it's just a pretty good indication of the outlook going forward. Now, let me just talk a little bit about some of the drivers, having set the context, in terms of what's the future state for M&A in Asia Pac, at least in the next 12 to 18 months. But unfortunately, we probably don't have the crystal ball, right, to really anticipate things beyond that. And it's, as you know, the world is changing rapidly. There's geopolitical tensions in Asia Pac. Companies are trying to reshape themselves. There's digital disruption, and then there's ESG, which I'm going to talk a little bit about as well. So I think at least in the next 12 to 18 months, we are optimistic about M&A activities here in Asia Pac. So moving on to the next slide, again, from our flagship study on the EY Capital Confidence Barometer, as well as the EY Global Divestment Study, right? We actually surveyed our CEOs and key respondents in Asia Pac around 3 things here. So you can see 85, 73, 84%. That represents very strong response, right? And the 3 key question is around, the first one being, 85% of the respondents are currently undergoing a significant business and technology transformation program. So let me double click a little bit on this theme, which is very key. So I think in terms of business transformation, a lot of companies, now are transforming to be able to position themselves in the new normal post-COVID. So I think COVID has brought, a awakening, right, to a lot of boards and CEOs around the world on how they can operate in a new normal. So if you are, as I mentioned earlier, a retail business, with quick service restaurants, for example, across Asia Pac, you will be thinking, how do you transform the shape of your business? You'll be thinking about, as I mentioned earlier, things like delivery, which is an additional source of revenue where you expect less foot traffic into your outlets. If you are operating a shopping mall, you'll be also thinking about, underneath the new normal where you expect less people to come into the shopping mall. How do you create a digital shopping mall, for example, which is a transformation itself, right, for some of these mall operators. If you are, a company that is in providing healthcare, right, you will also expect less face-to-face interaction with the doctors and the patient. So how do you do telehealth and some of this new leveraging technology to really dispense your services to the end customer? So technology transformation and business transformation, in my mind, is one thing, but it's basically, repositioning the business from a strategic point of view to operate in the new normal. Otherwise, you will not be competitive. The second part is basically divesting earnings, right, to invest in technology. So as companies think about operating in a new normal, I think 9 out of 10 companies, if I'm not wrong, you'll be probably 10 out of 10, right, will agree that technology will be a key part of the transformation, right? The ability to leverage technology, right? Anything from the front end in terms of, artificial intelligence, robotics, data analytics in the front end customer facing part of the business, to the back end in terms of, customer resource management, into the finance, tax, human resources function. Technology can enable a lot of the automation and efficiency that will put companies in a very good position. But how do you do that, right? You will need to free up capital. As we all know, technology programs are not cheap. So the ability to be able to divest, right? And basically free up earnings to invest in technology is going to be very key as well. So companies are looking at that to basically add, dry powder to be able to invest in technology. And the third one is about sustainability. So let me just talk a little bit about sustainability and the importance of sustainability worldwide as well as here in Asia Pac. So all across Asia Pac countries, we hear from a lot of the governments around the importance of climate as well as the whole sustainability agenda. We are seeing it play out in many different sectors. So for example, in Australia, there's a very strong focus on the energy and mining sector. The whole topic around energy transition is a very key agenda, and that drives transformation within players in those sectors as well. If you look at your normal consumer companies, when you think about packaging, so companies like P&G, Unilever, the sustainability agenda would also apply to them, right? And it just go on and on and on in terms of the importance of the whole ESG agenda, not only for companies operating in the economies around Asia Pac, as well as for shareholders and stakeholders, right? So we get to have conversations with large investors, large PE funds about ESG investing, right? We have many conversations with some of the major financial institutions in Asia Pac around green financing. So we see a lot of these themes being relevant in the M&A arena. There's an intersect on using sustainability as a driver and affecting M&A activities around Asia Pac, both within country as well as cross-border. So those are some of the key themes, as I mentioned, some of the key words that I'll drop with you in this presentation that I hope would be useful for you to take away. Now moving on, and that's the last slide. Yeah. So just again, looking at companies acquiring technology companies. So this is deal data over the last few quarters, right? So you can see that technology investment in technology companies are all-time high. So let me again explain some of the drivers behind that. Okay, so if a company is undergoing a business transformation to leverage technology in the new normal, right? Then the second question CEOs and boards will ask themselves, do we buy or do we build the technology, right? So, and either option has its pros and cons, as we all know, but definitely buying technology is a very viable option because of the speed to market, of the ability to bring in new capabilities that may be difficult, right, to organically build within the organization. That's why it is driving M&A activities. So that's number one. Number two is if you're an investor and you're looking at, for example, here in Asia Pac, we have China, which is getting a well-known reputation for technology as well as innovation. There is a lot of very, very interesting companies in China. So I'm talking about beyond the BAT, right? Beyond the Alibaba, Tencent, and Baidu. Underneath the ecosystem sits thousands and thousands of companies that are specializing in artificial intelligence, face recognition, you name it, data analytics, able to use data analytics to really understand customer behavior and to drive data collection and to be able to drive through a very deep understanding of how customer buy, when customer buy, and what customer would buy, right? Companies that really go in and do blockchain. So a lot of these companies in the ecosystem are actually very, very interesting investment targets for funds such as private equity, venture capital, and some of the big state-owned investment funds, right, that we have that are operating not only in China but in Japan as well as in our part of the world here in ASEAN as well. So that's driving it because the valuations are high, but the upside is also very high. So it makes good investment assets for some of these funds as well. So all in all, we're very busy with doing work in this sector. We will need to build a lot of the capabilities and harness a lot of the capabilities within our firm to be able to address the client demand in the technology sector. And that's what I'm sure not only us here in EY, but in the other service providers as well, as we see this trend in terms of where the market is growing and where the clients are placing their bets. So that's pretty much it in terms of the presentation that I have prepared for you. So I'll be happy, to participate in the panel and to continue this conversation with the rest of my esteemed guests as well as moderator. So back to you.
Yeah, thank you, Yew-Poh. It was a very, very informative and engaging presentation, I must say. But all good things come to an end, and we will have you for Q&As also in the panel. So now it's time to introduce our second esteemed panelist for the day. That is Mr. Shobhit Agarwal. It's a singular honor to introduce you, Mr. Shobhit, and welcome to the webinar. Mr. Shobhit is an MD and CEO of ANAROCK Capital Advisors. He is a visionary entrepreneur with a professional excellence and experience of over 20 years in real estate investments. In his past role, Shobhit led the capital market division of JLL India with aplomb. Having handled many marquee transactions, Shobhit has been instrumental in leveraging Indian real estate to the global capital market platform. In his 17-year stint at JLL, he created a robust platform focusing on client delivery and positioned JLL as India's market leader in capital markets. With equal intensity and expertise, Shobhit also oversaw JLL's hospitality business and helped various large hospitality chains with asset monetization and fundraising. His in-depth knowledge about the sector and the deep-rooted relationships with developers and capital providers have resulted into a multi-billion-dollar deals. At ANAROCK Capital, Shobhit will steer the strategic direction through the various investment verticals to ensure that ANAROCK's core philosophy of technology-enabled investor-centric decision-making continues to serve the best interests of its clients. Shobhit has a very, very varied education, very rich, I would say, diploma in financial management from one of the premier institutions of India, NMIMS. And he did a master's in planning, particularly urban planning from School of Planning and Architecture, New Delhi. And then before that, he did a bachelor's in engineering in construction from CEPT, Ahmedabad. He is affiliated as a member with the Institute of Town Planners of India. He's a national committee member on construction finance set up by CREDAI. And he's also a member of Royal Institution of Chartered Surveyors. So welcome, Shobhit, to this webinar. And it's a real privilege, as I said, to host you as a panelist here. So now it's time for Q&A. So I think I would like to take this privilege of beginning with Shobhit. So Shobhit, as Yew-Poh has been talking about rising global interest in APAC region, the surveys reveal that CEOs have been very, very keen and the confidence that they expressed in getting into M&A deals. But he also mentioned that India was out of it. So do you think that this phenomenon has, the APAC phenomenon is prevalent in other parts of the world, which technically do not come under APAC as per EY?
First of all, thank you, Dr. Pankaj, for a kind introduction. It sounds like I've done much more than what I've actually achieved. So thank you very much. Excellent few slides, Yew-Poh. I think it's beautifully put on what's going on around Asia Pacific on M&A. I think I agree with most of your, or all of your sort of observation. Very well done. I'll just quickly answer your question, Dr. Pankaj. M&A activity even within India has been very good. Obviously we've seen a large acquisition, privatization of our, national carrier to Tata's very recently. right? So we've been celebrating that. So obviously there is post-pandemic sort of a fury of M&A activities. People are selling and buying, as Yew-Poh also pointed out. And one of the big things that's emanating out of all this is, and he mentioned the keyword saying, freeing up cash flows to go out and do more and more M&A. And when they do that, I think land and real estate is the new oil. So if you want to go and buy something, the first thing guys want to dump is real estate, saying this is not our core business. This is let's sell surplus land, extra land, or can we do a sale and lease back and free up our cash flow to do something that's more productive. I think money is gravitating towards technology, financial services, and technology-led, platforms, SaaS, etc. Right, and more money is getting moved there. Having said that, we think there are enough and more people left who believe in real assets, and therefore that continues to be in demand. This year we've seen Blackstone, Brookfield, GIC, Ardia go very heavy on the sector, especially retail assets, which is high streets and big shopping centers. I think they've come back with a bang. I think next 12 months we'll see consolidation in hospitality, and I think it's going to be big, not only just in India, but across the world. We've just seen Four Seasons being taken over, majority shareholder by Microsoft. So I think this will continue. And like I said, in the new normal, money will move towards more fluid assets, more technology, more, like I said, all of that. But what it will do is also free up a lot of real estate. So pretty much in sync with Yew-Poh, saying all the things he said are absolutely bang on.
All right, that's very interesting, and thank you for bringing the real estate perspective. But you talked about financing also, and I think Yew-Poh mentioned that how companies are kind of looking at their own internal sources first while going for M&A deals. So I'm just coming to think of it, and this question is directed at Yew-Poh. Do you think that easy liquidity conditions prevailing around the world are also one of the reasons? Is there interest in financing the acquisitions also, or is it all led by internal accruals, by divestiture or selling off, or spinning off businesses? So do you think that easy liquidity conditions are also one of the reasons that we are seeing stock markets going up? There's been talk of fundamentals not really matching with stock market booms. So do you think that M&A is also coming up as an avenue that the money is available, and do you think there is an appetite with the financial institutions to fund buyouts, etc.? Yew-Poh?
Yes, I'll just got off mute. Yeah, so no, great question. Yeah, doctor. Before I answer your question, I just wanted to respond a little bit to what Shobhit was saying, right, around real estate. So it's a very interesting observation, Shobhit, because when company kind of, we know what the hot technology capabilities are, right? But there's one part of the real estate which is actually quite hot or being pivoted to, is this whole play around data centers. Right. So as we have more SaaS companies, as we have more artificial blockchain and all that, so what do we need, right? We need, data centers to house all the servers, right, in order to power the technology. So we see a lot of real estate players, right, instead of investing traditionally to build a commercial residential building, to really move towards building data centers. So it's if you look at big real estate players like the GLPs of the world, right? Data center is a very, very important part of their investment portfolio today, which may not be 3 years ago. So a lot of them are moving towards that space as well. I just want to make that short comment. Now, in terms of your question around financing, right? So I think one big trend that we are seeing, well, is actually from the US, but it's actually affecting Asia Pac, right? Is this whole, is this whole investment vehicle around SPAC, right? So the ability to form special purpose acquisition companies in the US has driven quite a lot of M&A activities as well, right? So for those of you who are not familiar with it, it's basically being able to list a shell company and then to be able to buy a business that fits into the shell company. So if you look at one of the largest deal that we have here in our doorstep, which is with Grab. So Grab is a delivery delivery business. They are into so just like Uber, they are into rides and stuff like that. So Grab was acquired under a SPAC vehicle, and that drove one of the major peak in the acquisition value as well. So things like SPAC, because of how hot the US market is driving M&A activities. Now, in terms of freeing up capital internally, that's another source. And obviously, in a lot of the deals that we see as well, because of low interest rates around the world, right? Being able to leverage and borrow to fund some of those investments are also there. So it's a combination of when a company or a client embark on an acquisition, they will walk through, right, and look at different ways to structure that, and we get to get involved in a lot of those work as well.
Okay, so that makes me think that if the way Fed and other central governments have been talking about raising the interest rates of late, so perhaps that might have some kind of an impact on M&A financing also. Now, thinking, yeah, please, your comments.
No, yes, I think it will, because that's why I said when we look at respondents, we couldn't see beyond a 12 to 18 month view, because a lot of things would change, depend on different governments' macroeconomic policies and what they would do with interest rate. I think so far in US, right, interest rate have been held relatively low. The Fed has come out to say no big changes going forward, but then again, things could change in 6 months or 12 months time. So we'll watch the market very, very closely to look at some of the drivers, right, that could affect the trends.
Great. Yew-Poh, one related question regarding financing itself. So we saw in one of your slides that the deal value has recently risen in APAC, and I was just doing some research for this webinar, and I found that globally the deal values have been found to be perhaps declining. I hope my data was correct. So is it, I was thinking why this might be happening. So perhaps one reason I could think of was, is it because some companies who are cash rich or are able to generate cash by freeing up non-productive assets, non-strategic assets, and they have survived the pandemic, and they find there's a great opportunity available in attractive valuations for some other companies. So the companies which currently may be out of favor for some. I think that, is it something like one man's nightmare is another man's dream, that kind of a situation where bargain hunting is taking place? Do you think so?
Yes, I think you're spot on. If you look at the measurement of deal value, right, and for those of us that have been observing this statistic, right, this particular measure over a period of time, one significant deal, can actually change the entire deal value, right? So if you look at some of the data behind it, in Asia Pac, on the average, every quarter, there's about 4,000 to 6,000 deals. And roughly, we know the deal value is between anything from 100 million to about 300 to 400 million. However, if you have one deal like the one in Grab, which is about 3 billion, then all of a sudden, right, it's equivalent to many deals. So large deals can distort that measurement around deal value, right? So a few years ago, deal value picked up in Asia Pac because Chem China bought Syngenta. As we all know, Syngenta is close to a $10 billion company, and things like that could really affect the deal value measurement.
Great. So next question I would like to direct at Shobhit. Shobhit, I was wondering, we were talking about this pandemic and the changed behavior and more interest in transforming your business. So is it growth that is driving this deal frenzy, or it is survival instinct? Because companies who may not have been very tech savvy now have realized that the quickest way to adapt to the changed situations is to go inorganically grow and acquire a company which is into tech. For example, in India, we see many banks now acquiring traditional banks, acquiring fintech firms, so that they can have that business unit with them. So what's your take on that? It is survival instinct or a long-term strategic planning for growth? What is really driving this deal frenzy?
A good question, Pankaj. But what I would like to say is, I think survival instincts are now past. I think now we're getting into a growth phase. So I won't even say survival. I think it was the fear psychosis in just at the beginning of the COVID last year. And I think now people have learned to live with it. Like Yew-Poh mentioned, it's the new normal. And in the new normal, now the next thing is to leapfrog, not even just think of regular growth, right? Unless you leapfrog, you're not growing, right? So my guess is that M&A activity is coming from that fact that people who are not really able to survive, but have very good businesses, right, are being acquired by those who have good balance sheets, good governance, good discipline, and are taking them forward. So I guess it's a combination. If you want to grow fast, there has to be people who are willing to sell. And I think the world is getting rebalanced, and that's what's stemming up or accelerating M&As around the world. What you mentioned is also right, saying that a lot of the banks are going for fintech acquisitions, but it's obvious to say if you don't do fintech, at some point you will have a feeling of being left behind. So naturally you have to go and invest in whatever relevant tech it is. So BFSI is going for fintech, real estate guys are going for prop tech, distribution businesses are going for delivery tech, whether somebody else. So, I did, and I think Yew-Poh made a good point saying data centers are the new asset class, but I'll just say it's probably digital and e-distribution. So warehousing as well as data centers are going to grow for the next 2 years, because we've changed the way we've changed the supply chain forever, right? So many things, especially look at Singapore, is directly delivering from warehouse to your houses, right? There is no retail shop in between, right? Likewise, data, every country is saying has to be saved within the geographical constraints. India just put that law. So many other countries are putting that law. So my guess is data ownership, data security is going to add, and everything is now digital. So we've actually started a practice around data center, which we didn't have 2 years ago, by the way. So obviously it is the new normal, and I think it's going to stay. So M&As will continue. I think, like I mentioned before, technology adoption is almost inevitable. So if you don't adopt it, you're going to be out, whether it's the consulting firm, the services side, the manufacturing side, everywhere else. So everybody's trying to improve productivity. Ultimately, it's about becoming more efficient, the yields have to go up for every asset that you own. It's not really just about real estate assets. Whether you own financial services as an asset, you own services as an asset, your productivity and your yield has to go up, right? It includes individual yield. My productivity has to go up, right? So I think the world is getting more efficient here.
Yeah. So thank you for that, Shobhit. Now, a related question to you, Yew-Poh. What do you think that, your survey also mentioned that many of the respondents are very keen on business and technology transformation. So this awakening, what do you think? This is again reactive. Whatever happened during the, if I may say, heydays of pandemic. So it is reactive or it is being proactive? What's your take on that? You are muted, Yew-Poh.
Yes, I am. My apologies. Yeah, so great question. It's a combination of both, frankly, right? I mean, the whole digital disruption happened about, 7 years ago, around 7, 8 years ago. Companies are awakening to the fact that, in order to be competitive, there needs to be a new business model, right? But then there's also a lot of companies that believe, hey, I'm running a retail business doing very well. I'm running a shopping mall, foot traffic continue to come in. There's really no great impetus to transform. But I think, if you look at certain markets in Asia Pac, right, which is amazing. I mean, if I use China as an example, yeah, I mean, we all know that internet penetration in China is really very, very high compared to the rest of the world. But what the pandemic has done, it has unleashed another segment of the population, which is elderly, to actually embrace the internet, right? So when you have, not only young people on social media and doing, purchases online, and you have old people. So when I say old people, is basically people from 50 years old and above, which is a significant part of the population as well, added into the internet class. All of a sudden, the penetration has gone, just sky high. And company realize, and with a lot of the safe distancing, some of the lockdowns that's going on, they are not seeing the kind of traffic that they will see pre-pandemic, and really forces them to rethink about the business model, right? So Shobhit talks about, we talk about data centers, we talk about warehousing. It's just reinventing and really rethinking the whole supply chain and how they do business. Right, so supply chain for delivery companies, supply chain for your typical products companies has all been, reconfigured, right, in Asia Pac. So I think, and especially in Asia Pac, where we all know about, some of the geopolitical tension, right? People also realize China being the manufacturing capital of the world with a lot of lockdown and a lot of restrictions. How do they take their goods out of China to serve the rest of their market? So thinking about a supply chain for China, for their businesses in China, as well as a supply chain outside of China for their businesses outside of China. So those whole some of these pandemic-driven factors, as well as the whole continuing penetration of the internet, has driven the transformation in technology, in my mind.
Great, Yew-Poh. This question is again to you, Yew-Poh. You talked about the ESG factors and their growing importance. We all know that everybody is talking about sustainability now. But there is a contradiction which can be observed. Like, for example, if you talk about developed countries, ESG factors are priced correctly. I mean, if the company is not doing well on these factors, the returns may not be commensurate. But the evidence is not so clear when we talk about less developed countries or emerging economies. For example, one recent case in point could be, there is a company I would not like to name in India, which is into tobacco. I think Shobhit will identify that company by my description. And despite being, I think, India's largest tobacco company, their share prices, they receive wonderful valuations. And when you were talking about ESG factors and its importance, in APAC also we see that, except Australia, these factors have not really been gaining a lot of currency at other places. So what's your take on that, Yew-Poh?
Yeah, we take a very long-term view around how companies in Asia Pac will respond to the whole ESG agenda, right? So there will be early movers in certain sectors that will embrace it. There will be companies in Asia Pac that may not embrace it today, may realize that this is something that they need to work on at this point in time, maybe not requiring a significant transformation, but maybe further down the road would embrace the whole ESG agenda. I think just because of the diverse geographies that we carry in Asia Pac, and then the diverse sectors that we have, as well as different governments' agenda, we do think the whole ESG agenda would take a long time, right? And in Asia Pac also we carry developing markets like India, like China, which is still developing, and then we carry some of the more mature economies like Singapore, like Australia, right? So I think this whole agenda will affect companies very differently, and we think this will be a it's not going to be a 2 to 3 year type transformation. It will be something that will carry on and be relevant in the board's agenda over the next at least 5 to 10 years.
All right.
And it will change, and it will change because what they require today may be very different from what they require 5 years from now. So you mentioned tobacco. It's very interesting because some of these industries, such as you have it in India, Japan has it, China has it. They are not really, and as you know, they are making significant margins and profits. But whether they are embracing the ESG agenda, not yet, right? As compared to other sectors.
Yeah. Okay. So since we have started touching the ESG issues, now one thing that is coming to my mind is academic research has been long talking about mergers and acquisitions and mergers both. They're not working out because of the human and cultural factors. So there is a huge evidence that mergers and acquisitions will ultimately turn out to be a futile exercise. And there has been, non-academic evidence also jumping at you. So, Shobhit, I'm directing this question to you. So, do you think that human factors will ultimately determine whether this frenzy was actually worthwhile, or this is going to lead to another set of failures? This will not really materialize into the strategic visions that people thought of.
I wish I had a clean answer, but you're absolutely right. We've been through M&A ourselves. We sold our business to a multinational company. We had very different cultures, very different geographies. People across 80 countries were working together. But look, once you do an M&A, you have to still continue to work. It's like any other setup, or call it a kid being born. You have to train him, you have to teach him, you have to coach him to work things out, right? It will be a new culture. So when we merged, it wasn't our culture, it wasn't their culture. I would say it was a new culture that evolved, and then that became the new culture of the company. But it takes time. As long as you're conscious about the fact, just the way Yew-Poh mentioned, that ESG is on the agenda. Whether I can run very fast with it, whether I can run slowly with it, it'll change. But human factor will always work, unless you're buying a SaaS company, which doesn't require people. You buy data center, it won't disrupt anything because there's hardly any humans there. It's the machines that are working for you, right? There will be, most businesses would require human touch and human cultures to be realigned, but you have to work on it. It's not that you can just buy something out and hope that it'll work without putting in that effort consciously, right? So as long as you consciously do it, it is required. I think most companies used to overlook it, but now I think it's a well-established practice. Lots of consultants, including EY, would tell you to do that. There will be a map of a successful M&A. So I'm sure it's quite normal. It's pretty normal nowadays to bring the culture back or create a new culture.
Okay, great. So Yew-Poh, Shobhit, I just pick up from Shobhit. Shobhit, some moments ago mentioned about improving efficiency because of this consolidation that is taking place, right? Now, efficiency can be a great word for Wall Street, but Main Street really does not like the mention of efficiency because it also means job losses. Now, pandemic itself has caused a number of job losses. So since we are talking about ESG factors, and this is the social impact that M&A deals and increasing M&A deals will have. So what has been your observation? Because you have been involved in such a huge number of things. So did you have an opportunity to have a look at that? I mean, of course, efficiency requires duplication, overlaps. They will require some load shedding. But what has been your general observation? And especially, do you think anything has changed right now in the current frenzy of deals?
Yeah, so no, it's a great question. I mean, we see a lot of companies pivoting towards the long-term value agenda, right? So in the long-term value agenda, it's just not measuring success based on a set of financial KPIs, right? Companies are increasingly adopting the long-term value framework, right? Which is, how do I create financial value for my shareholders? How do I create value for my customers? How do I create value for my people? As well as how do I create value for the community that I operate in? We see a lot of companies embracing this framework. And if you just, on your question, if you just look at a financial efficiency point of view, right, it would lead to very linear decisions around jobs and positions, right? But if you look at it more holistically around the long-term value, right, we believe that companies will then have to work it out, right, in terms of how they want to create value, not only in the financial segment, but also for the customer, for the community, as well as for their people. So a lot of boards and CEOs are embracing this. I mean, on your earlier comment around failures of M&A, right? So for all of us that have read books from business school, 70% of M&A fail, right? So that's a statistics that all acquirers are living with. But I fully, echo what Shobhit had to say. I mean, it's just basically the ability to continue to work on it, right? It's almost like a lot of people, a lot of companies, look at IPO as kind of the milestone, but it is not the milestone. It is beginning of a new milestone, going from a private company to a public company. So closing a transaction is not the end. It's just the beginning of a very long journey of integration, transformation, and working together. So I think if companies have that mindset when they embark on an M&A, they should be able to come out on the positive end of the curve.
Okay, wonderful.
Yeah,
Should
I
you have
like
a comment?
I like to comment on this. See, look, every few years something happens, right? And it transforms your business either very much or somewhat, right? And look at India as a country. We were very agrarian and we've now become very technology heavy, right? So obviously people, and look at it from productivity standpoint, I mean, farmers are producing more per acre. They're earning better for themselves. Their kids are now dealing in technology because they're all getting educated. So my guess is this will also lead to a change, and it's okay to lose your job as long as you can figure out ways to deal with it, right? You can't be sitting at home and watching TV, right? If you're doing that, then you're in trouble. But obviously you have to move on. So changes means that you'll lose some parts of jobs, but you'll also create new jobs. So data centers didn't exist pre-pandemic, not as much or not as many. Likewise, warehousing didn't exist. I'm sure SaaS business didn't exist in as many. Today they're employing. Today technology firms are out of their mind in employing people. I mean, I think if I'm in the wrong industry, I should just move to tech. I'll probably have 4 jobs and I'll still not cry about 996, right? I'd be multitasking myself. So there's some industries that do create enough jobs. Yes, some are going down. That's fine. That's absolutely okay. Right.
Yeah.
So
Okay.
I'm okay with it. So.
Great remarks, Shobhit. One more aspect, which is a system level aspect of rising M&As. So I think we all have been observing, especially in the earlier, regime in the US, that some sort of protectionism, starting to take root across the world. And when we hear murmurs of protectionism in the US, a similar kind of reaction starts to be visible at other geographies. Now, I'm very intrigued by this rising trend of cross-border M&As. So I would like to know from you, Shobhit, first, and then Yew-Poh also. Do you think that this cross-border increase in cross-border deals is some kind of a born-again globalization happening?
It's quite predictive. I would have been happier if Yew-Poh answered that before me. But listen, I think globalization in real sense is inevitable. So M&As will continue. We will continue to learn from each other, adopt each other, become efficient. But I think there's some kind of protectionism that is coming at the moment. But in my view, it's momentary. It's not going to be long lasting. And maybe as Yew-Poh mentioned that, he has comments or visibility for the next 18 to 24 months. My guess is these things will change as global leadership comes together. I think right now everybody's politically correct. You're trying to protect your jobs, your people, use more made in whichever country, right? So all this is going to change. I think ultimately we will start to see whatever is most efficient use of money and capital will come back. It can't be artificially reduced, is my view. But I want to hear you, Paul.
Fully agree with you. Yeah. So we believe the flow of capital is something that cannot be reversed, right? So it's basically, if you think about the world and capital flowing from one part to another, is due to certain factors that's happening in the world around us, is really where the flow goes. So previously, the flow may be, going from Asia to the US. But within Asia, there's still a lot of significant market for companies to divert their capital into. So within intra-Asia, in terms of capital flow, could be another hot area in the next 12 to 18 months, rather than going between Asia and US and Europe. So I think that flow of capital will continue to be there, right, in terms of the flow, but the destination of the capital may change due to various factors. So I think as long as we believe when there's a capital flow going on around the world, that will create a lot of economic activities, that will create a lot of jobs, which is positive for everybody, right? Both the countries, the economies, as well as the companies themselves.
So I think given the time, perhaps this will be my last questions to both of you, starting with Shobhit. Then we can invite participants to post their Q&As. And in fact, before I proceed, I would like the participants to type in their Q&As if they have, and make use of this great opportunity to get answered directly from our eminent speakers. So Shobhit, I was just wondering that when we're talking about deals and so to take a holistic view, do you see any concerns emerging? I mean, for example, particularly APAC is dominated by developing countries. So this deal making is essentially for cash-rich people, so cash-rich companies. So do you think that the developing countries firms are going to get owned by the richer counterparts in developed world, and the ownership is going to get transferred? Because Yew-Poh also talked about cross-border flow of money, and governments will welcome that if the money is coming in. So what's your take on that?
My personal view on this is that I'm not very worried about some rich nations owning developing countries or developing nations. If you look at our own example, and Yew-Poh mentioned about some examples from China, we've created just in this year 34 unicorns, which means the money is just come into the country, right? So this is sale, or this is what you call as offer for sale. If the companies didn't need the money, you created a billionaire, the money just came into the country, and now it's going to stay in this country, right? So these guys are going out, setting up family offices, like how US had it, how Japan had it. Now India is creating their family offices. And by the way, these family offices are now not saying we'll buy in country. They're okay to go buy businesses in Australia, Japan, China, wherever they're getting. So I think it is not, I'm not scared. It's not going to be another colonial situation where one country will own up or end up owning another country. I think those days are gone. There's lots of intellectual capital that can beat this trend. We keep worrying about money, but that's not correct. There's a massive amount of intellectual capital. China has shown us the way on manufacturing. I think we are leading it on technology, but I'm sure everybody has its own mojo in some sense, all countries, and I'm sure they will do what's right for them.
Yeah, you're right. You're right. I mean, I couldn't agree with you more. Yeah. I mean, I think the developing countries have shown a very, very strong appetite to innovate and to be at the forefront, right? So here in Asia Pac, not only the big economies like India, China, Japan, where there's a lot of innovation going on in Japan as well, but also in, you know, Southeast Asia, right? You look at the number of unicorns, right, that Southeast Asia has created in India. In the Singapore government is attracting a lot of these innovative companies to set up shop here in Singapore, and then very innovative companies in Malaysia and Thailand as well. So, you know, we don't, you know, we're not worried about it at all, because we believe in the developing world, companies will continue to innovate, because in technology, right, you're able to actually, you know, transform very fast. Right, you're able to attract capital, you're able to jump the S-curve and really get to a certain scale in a very short time frame. So I think that trend and that driver for a lot of companies operating here in Asia Pac would put Asia Pac in a very good position going forward.
Okay, perfect. So I think we can now invite the audience to put up their questions. Are there any questions from the audience side? I'm not seeing any in the Q&A.
I think you've done a great job in asking questions on their behalf. You should be, you're almost a magician asking all the questions, what's in the mind of the panelists.
Well, thank you for that. But I'm sure based on your answers, new questions must be coming to their minds also. So is there anything, audience, which would you like to ask? All right. So I don't think there is any more questions coming. So I mean,
if I may, sorry. So there's a question. I think Yew-Poh answered it, but maybe I should read it out and see. So the person asked, how is the business of acquisition of stationery, office toner, cartridges, and office printing machines? So how is the business of acquisition in this area? So maybe it can be answered for everyone to, you know.
Yeah. So it's a business that's in high demand, right? So because of, you know, people working from home, you know, people requiring a lot of these devices to operate in the pandemic world, we find a lot of these businesses expanding capacity rapidly. Whether there's M&A activities, no, because we believe that a lot of these companies are able to kind of, you know, meet with the demand. We think supply chain is going to be an issue. So being able to ship the end product to the various geographical market, because there's just going to be choke points, right? With a lot of this border closure, being able to bring goods out of a certain country into a certain country. So the supply chain would be one of the major kind of roadblocks to efficiently deliver the products. But by and large, yeah, it's a good sector to be in. Lots of businesses, lots very full order books, and the factories are very busy.
So, Paul, I don't think there is any other question.
Yes, so I guess that would be bringing us to the final parts of today's session, and which is to say a very big thank you to, first of all, to you, Dr. Pankaj, for being the moderator for today, and also to our panelists, our speakers, Yew-Poh Mark from EY, and Mr. Shobhit Agarwal from ANAROCK Capital. So we very much appreciate this opportunity, and thank you for spending this quality time with us. To our attendees that join us from wherever you are, from India, from Shanghai, from Africa, from any country in Europe, we say you're welcome and thank you for being a part of today's discussion. So we're going to make this recording available on our YouTube channel. We're also going to make it available on our website thereafter. Or if you are following us on social media, on LinkedIn, on Facebook, or on Twitter, you can be sure that we also share the link via this platform as well. And again, we have other webinars that we are hosting. We have our next webinar on the 30th of October on income inequality. So we are trying to look at what is the new trends in the income inequality issues across the global south. The global south mean emerging markets. And with that, we have Dr. M. Hussein Assar, who is a professor of economics at Rosedale University in Denmark to be the speaker for that webinar. It's open now for registration on our website, same place that you register for the M&A webinar. So you can be a part of that webinar on October 26th rather. So thank you all for being part of today's webinar. We'll come your way again soon. Thank you.
Thank you, everyone.
Right.
Thanks for inviting us. Take care. Bye-bye.